Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Thursday, May the 6th, 2010. And if you've been watching our videos, man, you're making some money today. You are just totally bank. We've been topping, we called the peak. We've just been doing awesome here. If you've been betting against us, well, we're taking your money. Ha ha. But there's good news. If you can't beat us, you can always join us. So let's check out some charts. Starting off, look at the VIX. This is a 6-month daily chart. 6 month. Each one of these counts as being 1 day. You'll notice we called this bottom here and this reversal signal, show potential there. Big move up here. We've called basically all this perfectly. And today we got confirmation. You see this previous high of 29.22? Well, we actually broke out of that today, and that is a good sign for bears. Basically, you break out of that previous high and closed above it. That's all really nice. You could any pullback here is basically going to find support at this level, and even if you pull below it, you'd come back up to this level to basic support. So stay on the short side again. Let's look at the Dow Jones in a moment, but look at this here, 77.04, still not overbought. You've made all this move. Typically, you would see it up above by now. The reason why you're not is because of the size of the problem in Europe. It's so big, the markets are having to quickly revalue themselves much higher, and it's you're going to see it reflected in your charts. You're going to see it reflected in the VIX. You're going to see it reflected on the Dow Jones. The VIX runs the opposite of the overall markets, but the main thing to take away from this is that we have much more to go. We have a lot further to go. I said yesterday, get short, stay short. I reiterate that today. So let's look at the Dow Jones right quick. Okay, this is the Dow Jones Industrial Average. This is a 6-month chart, looking at each one of these candlesticks being 1 day. Somebody owes me some donuts. I told you yesterday we'd be below 10,000 before too long, and the very next day, zoom. Okay, we did bounce back above it, but either way, I want some donuts, chocolate filled with sprinkles on top. Okay, all right. Seriously, let's look at this. I told you way back when we got this sell signal right here that all of this move to the upside wouldn't really matter. You didn't even have to trade it because you wouldn't be missing anything. It would pull back, and sure enough, she did. We also told you the run would be short-lived, and it was. We also told you this 8 weeks time period was bearish, not bullish. And if you go back and look at the last time it happened, 2004 January, you can see it was a peaking area, not a time to be buying. We also told you 2004 was more of a consolidation period, and this one would not be that. And we told you that the overall markets would miss that. They would say it's a consolidation before moving higher, and they did try that. But today's candlestick, that's what I want to point out here, this big move lower right there, okay, that proves right there, that's a technical signal telling you this is not consolidation of any shape or form. Consolidation looks like that right here. Let me get the right tool. Okay, you see this little tiny candlestick? It got a lot smaller. You had a big down day, a little small one, big down day, big up day. Okay, it's the small candlestick activity, this consolidation after a major sell-off, and that's why we warned you yesterday not to fall for this one. Don't be fooled into thinking this is a reversal point to stay short. And of course, then we get this really big sell day that is much larger than anything we've seen in quite a while. So definitely stay short. This is not the end right here. This is too big of a move on the technical side to be saying, oh, we're just going to bounce right out of this now. It's not. This is a big revaluation lower based on debt, which is in the world. It's, like I said yesterday, if subprime mortgages cause a market crash, excuse me, if subprime mortgages cause a major market crash in the U.S., what do you think happens with subprime countries? Okay, it's going to be bad. We've also told you that Moody's already threatened the U.S. with a downgrade of their debt rating from AAA if the recovery wasn't as robust as hoped for. What they basically did there is they drew a line in the sand. So now this humongous pullback that I believe is coming is going to force them to end up downgrading the U.S. debt. Not a good thing fundamentally, okay? The market's not even calculated that in yet. We're looking ahead. We tend to stay ahead of the crowd, so be paying attention, watching for that. But the main thing to take away from today's video is that this is not the end. This is just the beginning and the simple size of it. I know they're trying to tell you, well, the electronic trading machines got away from us. No, I don't think so. This is substantial selling. This bounce that you saw at the end of the day, the second part of the day after this nearly 1,000-point sell-off happened, was caused by people realizing, okay, you've gone too far in one day. You're gonna suck some of that back up, and sure enough, they did. And even though you're trading below you closed below the lower Bollinger Band line. Remember the VIX. It's been pushing above it because it's revaluing the entire situation. Fundamentals have changed, or at least have been brought to light. So we're going to have to revalue, plain and simple. Stay short. I would short, plain and simple, fearlessly. I keep saying plain and simple. I gotta stop doing that. It's as bad as All right, let's look at some more charts. All right, this is the NASDAQ 6-month, one-day chart. Lots of gaps here to be filled. A lot of them just got filled today with the activity of the major sell-off. But take a note at that right there. See, substantial sell volume. What, 4.5 billion shares? Yeah, you don't want to be exiting the short when you see this. This is just a start, plain and simple. You'll also notice moving down. Hang on a second. Move on down here. Note the histogram on the MACD. That's very bearish. It's still getting bigger on the downside. See that? You don't want to cover there. You want to wait. If you were going to cover a short, you'd wait until you had a reversal of that. The histogram would actually start to tick higher back the other way. Then you would start covering your short. I'm not covering shorts at all, but I'm just telling you that's how I would do it. If you're short any of the things that we've been recommending, not based on recommendation because we're not allowed to do that, but if you happen to be short anything, the best technical trick we can teach you whenever a stock has moved in your favor is simply take the stop loss limit. Like if you entered a short here, I know we recommended the Q yesterday as a short, and it's down substantially today, which means had anybody traded that, not that we were recommending it, we're not allowed to do that, but we just give you the ideas based on our opinion. So, but if you had, you would simply be able to just take your stop loss limit and go zip right there, lock in a little bit of gain, and not to worry about it. Okay, if she bounces up and kicks you out, big deal. You made a little gain, and everybody's happy. Okay, that's how you could do that. But again, my overall view fundamentally is we go much lower. So watch yesterday's video. I talk about the concern with trying to trade in and out of this downtrend. It's not really probably the best activity. I will be looking to add to my short positions over the next couple of days in my portfolio. As always, if you're not a Full Access member, it's 100% free. Go to our website at perfectstockalert.com. There's the link. Okay, you just go there. It's 100% free. Sign up. You can see what's in my portfolio. You can follow us on Facebook or Twitter, and you'll get access to and alerted to every move I make in my portfolio because I'm allowed to tell you guys what I'm doing. I'm just not allowed to tell you what to do. Okay. Yeah, that's how I would do that. Let's look at our disclaimer right quick. As always, the information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. Get off your duff and do your own research. Basically, that's what that means. To summarize, we do not provide investment advice, okay? Nor do we make any claims or promises that any information here will lead to a profit, a loss, or any other result. What exactly does that mean? Any other result? I don't know. But anyway, that's the disclaimer, do your own due diligence. Again, I'd like to thank everybody for referring their friends and sharing our videos. We are growing, and we're going to keep working our tail off to show you the best trades we see in the market based on the technicals, the fundamentals, etc., etc. We've built you a really awesome free website. Please check it out. Refer your friends. God bless, and enjoy the evening.